This is your LMAX exchange technical update for Wednesday, January 4th, 2017. Euro dollar. So the euro clearly remains pressure to the downside with the market breaking to another multi-year low, this time to its lowest levels and just shy of that 2003 base, which came in at 103.36. Right now, the focus is on a break of that 103.36 2003 low and for a move down towards the next critical support in the form of that parity level. At this point, any rally should be very well capped with only a break back above 108.75 to compromise the bearish structure. Sterling dollar. Cable also remains pressure to the downside, and this market is focused on potentially retesting that critical October plus 30-year low, which came in at 118.40. At this point, it would take a break back above 127.96 to ultimately take the pressure off the downside. Dollar yen. So dollar yen has been trading up to recent highs at 118.67, has been since consolidating, but overall dips have been very well supported, and there is risk for a push beyond 118.67 and towards next key barriers at 120 further up. If we do see a break back below some recent support, which comes in around 116.04, 116.05, that would trigger the onset of a correction. But again, the focus now is shifted to the top side with any setbacks expected to be very well supported in favor of a higher low and fresh upside. Euro Swiss. So Euro Swiss continues to gravitate lower, and the focus here is on a retest of the 2016 low, which comes in at 106.24. It would take a break back above 109 to take the pressure off the downside. Aussie dollar. So Aussie has seen a nice little bounce this week, but overall the pressure here remains on the downside, and any rally should be very well capped up towards the HEV 74 in favor of the next breakdown below key medium-term support at 71.45. Dollar CAD. So dollar CAD has seen some setbacks off its recent high at 135.99, but these setbacks should be very well supported, well ahead of the previous higher low at 30.81 in favor of that next major upside extension beyond 136 and towards 140 further up. Kiwi dollar. So Kiwi continues to show signs of forming a major top after stalling out in 2016 just shy of 75, and at this point there's risk for a fresh drop towards next key medium-term support at 66.76. SPX 500. The S&P 500 has recently stalled out after putting in a fresh record high in 2016, late in 2016, but overall the pressure here does remain on the top side, and there is the risk once this correction plays out for fresh upside beyond that record high at 2280 in that area and towards and beyond 2300 further up. At this point, it would take a break all the way back down below 2180, that low that we saw back in early December, to take the immediate pressure off the top side. Gold. So gold is showing signs of putting in a base right now after stalling out by some critical longer-term support and some fib support in the 1120 area. And if this market can establish back above 1165 on a daily close basis, it could do a good job of strengthening this outlook and putting the focus back on the top side, potentially for an eventual retest of that 2016 high at 1375. At this point, it would take a break back below that recent low at 1122.75 to take the immediate pressure off this renewed pressure that we've seen to the top side. It would take a break back below 1122 to negate the possibility for a basing pattern and put the pressure on the downside and for a focus towards critical psychological barriers at 1000.